Joining me now, Christine Short, Head of Research at TMX Group. Christine, thanks so much for being here.
Thank you for having me.
So we're talking retail. We've, of course, heard from a lot of the big names in the retail space in terms of earnings. We have Black Friday this week. Tell us, what's the single biggest takeaway about the consumer that we know right now?
You know, it's not new. We've been hearing about this for a little while, but from a lot of the earnings reports that we've heard recently, it's about this bifurcated consumer, that retailers are still seeing strength with higher income consumers, but on the lower end, they're continuing to see that squeeze. And overall, I think across all income brackets, consumers are really looking for a bargain. They're looking for value. That's why you're seeing, some of the discounters like Walmart still perform well, although they even said they saw some moderation from the lower income cohort, and then the off-price retailers. So TJX companies, Ross stores, anyone that's giving a perceived value, something worth more, but you're getting a bargain for it. That's what customers are looking for.
So customers continue to be price conscious, but they're still spending.
They are still spending. Whether or not that's a good thing, if you look at the latest New York Fed Reserve Bank quarterly report on household debt and credit card debt balances have gone up about 5.8% in the third quarter versus the year ago. So it just shows that to fund some of these purchases, consumers are relying a little more on debt for their daily, everyday expenses.
So how concerned are you about the consumer based on what we've heard from retailers, but also based on statistics like that?
Yeah, it's funny. I kind of look at everything in three buckets. I look at what the companies are saying, I look at what the economic data is saying, and then I look at what consumers are saying, because some of these surveys, like the University of Michigan Consumer Sentiment Survey, reported their lowest reading their second lowest reading in the 80 years that they've conducted this survey. But it doesn't always mesh with how consumers are spending, but it does show the concern. They're preparing themselves for what might come, right? Between the government shutdown, the longest in history, we're still unsure of tariff impacts or what's going to happen with trade policy. Some of these jobs, we've been seeing some pretty big layoffs. We still don't have up-to-date jobs reports. So I think overall, consumers are feeling kind of this tense, anxious feeling about what to expect in 2026. But then I'll look at other surveys like the National Retail Federation survey on holiday spending. And most people surveyed are spending, I think they had over the holidays, $890 this holiday season versus last season, which was a record of $900. So we're just about $10 below the spending of last year. Some of that can be, inflation, but also it just shows consumers are still spending, and families, in fact, are expected to spend $33 more this year versus last year. Whether they're putting that on credit cards, we'll see in the next Fed report. But so those two surveys are kind of telling a different story, right? There is the anxiety out there, but they still want to make this holiday season great. They're willing to spend for it.
Is there anything in any of the data, though, that indicates a recession could be on the horizon or the economy could be severely contracting?
I don't think there's anything right now that's pointing to that. We're still seeing quite a resilient consumer, but I know there's been chatter about recession. There's been a chatter of a correction in the stock market. You have a couple of big bank CEOs talking about that at recent investor conferences. And so I think that all impacts how consumers are feeling about their ability to spend and keep a job going forward. And so you're seeing some of that reflected in the surveys. But there's not one data point I can say right now, yes, for sure, this is heading in this way or that way. It's still all, at the end of the day, pretty good data, but we're continuing to see this slowing.
You mentioned the uncertainty around tariff impact. What's the read-through from the majority of the retailers that you heard report in terms of the impact that they're feeling from tariffs right now?
Yeah, many of them have reported on taking this multi-pronged approach. It's different for each retailer, but it has included raising prices, which most consumers have stayed on board for, but also moving supply chains, moving production, negotiating with suppliers. So it hasn't been one thing, but it's included a combination of all these different moves. But they've, for the most part, I think, been able to offset where tariffs are at current levels. But were that to change, they'd have to get in there and rework it. But
what happens if the Supreme Court actually strikes down the current tariffs? Any talk from retailers about what that could mean, and could that flow through to earnings then?
Yeah, that would certainly help the bottom line. But again, that's giving you this other prong of uncertainty, right? Because we're still not sure. It makes it hard for companies to plan, to give guidance whether or not the tariffs get struck down, whether or not they stay at current levels or go up. And so I think overall what you're hearing in reports is it's getting harder to give guidance into 2026. So they're just operating as an as is, the data they have now, but we'll reevaluate certainly if something like that changes.
Speaking of guidance, what can we expect from the holiday shopping period? Because we know that really kicks off. It's already been kicking off. I've already been getting Black Friday specials as of last week. But,
Right.
We have Black Friday, we have Cyber Monday coming up. This is really a key time for retailers.
Yeah, and like you said, some of these deals have been going on for the last, I think Amazon started theirs on November 20th. So it's creeping into the week before Thanksgiving now more than ever. So like I said, the National Retail Federation thinks things are going to be quite steady. It's likely to be the second strongest holiday shopping season. They're expecting shopping to surpass the 1 trillion mark in spending. And so by all accounts, firing on all measures. And if you look at some of what the retailers are saying, they're off to a pretty good start. People are still out here buying. There's winners and losers, of course, as there always is. I do think you're going to have to continue to see some deep discounts. Like I said, the consumer's very value driven right now, so they're going to want to see those promotions, and I have been seeing those 40% off, 30% off. So really to push inventory and to woo customers in, they're having to offer these deep discounts so that consumers feel like they're getting a deal.
Can you highlight some of the winners that you've seen this season? Obviously, Walmart was a key
Obviously,
winner
Walmart.
at Target's expense.
Yeah, it's so funny how that has fallen out. But yes, Walmart, some of the off-price retailers, so TJX, the parent company of Home Goods, Marshalls, and TJ Maxx. Ross Stores, another off-price retailer, both of them increased guidance for the full year because of how well they were doing. They were seeing, increases at all income cohorts. And, on the downside of things, you actually had the home improvement retailers. So it was Home Depot versus Lowe's. Lowe's actually outpaced Home Depot a little bit, but both of them said that they decreased full year guidance. Home Depot specifically said even with their wealthier income cohort, they were seeing people pump the brakes a little bit on high cost projects, large ticket items, waiting to see where things were headed. So not necessarily investing in those large projects. And we've seen that in the last quarter, that they saw folks delaying some major projects. On the other side, I'm trying to think of some other Target, like you said, they haven't given the perceived value that they once did, and they are losing, out to Walmart, certainly. I think surprisingly, Gap actually did quite well. So it has me wondering about some of the other apparel retailers that work across cohorts. So they have Old Navy, of course, they have Gap. Those were the two sort of winning subsidiaries within the Gap report. So you can still, it's not that consumers aren't shopping at places that aren't discounters or off price, but again, Gap gives some pretty good sales. So I think that's why consumers are coming in for those deep discounts.
Although interestingly enough, the CEO of Gap was on, I believe it was CNBC, and saying that they don't have to lean as heavily onto sales this holiday period. So it seems like there's just, the brands that consumers want right now. I don't know how much social media plays into that. Just finally, when it comes to retail, we obviously talk a lot about, or we look a lot at same store sales growth. But because of the inflationary impact and because prices keep rising, do you think that we should be more focused on things like foot traffic to give us a better sense of how much people are actually shopping and then in turn spending?
Yeah, that's a great point. Even like some of the other surveys I'm talking about on consumer spending, it's of course the consumer spending is going up, but it's because of inflation, it's because things are costing more. Even looking at number of items purchased, or like you said, foot traffic, can certainly help you put together that mosaic. So we're not leaning on one data point. We're having to kind of look at everything to figure out, how well is this retailer really doing? Because like you said, the CPI, the increased inflation, is making that picture a little more murky.
All right, Christine, really appreciate all of your insights. Thanks so much for joining us.
Thank you so much for having me.
That's Christine Short, Head of Research at TMX Group.